All right. Welcome, everybody. Looks like a few people still kind of filtering in. All right. My name is Keith Bybee. This is the Trade Findings and Adjustments, January 23rd, 2020. It's good to be with you again. It's been a little while for me. I think beginning of December was the last I was here taking over a class. Kevin got a little sick and asked me to take over today. So here I am. And just want to give a couple more minutes, seconds, see if anyone else is still trying to log in. And those of you who are here, I assume you can hear me loud and clear. All right, cool. So what do I want to talk about today? Obviously, I've got this Boeing, excuse me, Boeing chart up. And I just kind of wanted to go over a little bit of how we're looking at this one in our actual portfolio and money management for clients who have Boeing stock. So, just a little recap. Many of you know we've been over this several times, so I'll just make it short. Boeing has had some issues with their 737 MAX planes, and they're going through the process with FAA to get them re-registered, or I don't know what the term is, but getting them okayed by the FAA again to start production, start selling new planes back to some of the airliners. So recently the news has been that they don't expect to really be out until as far as getting approved for the next 6 months. I kind of feel, and Kevin has gone over this especially last time, it doesn't seem like it will take that long. Obviously, you never know. I think they're kind of trying to ease expectations of anything quick so that if they do get it done quicker and can get their approval and the FAA can get their act together and get things done, then it'll be a pleasant surprise rather than another, oh wait, we have to wait a little longer sort of thing. So, but in the meantime, it's kind of still crappy news, and technically they've broken through this. I mean, it's a 330, 322-ish support level, kind of around that range for our stock positions. On Boeing, we had protected a few weeks ago we had bought February 20th, 330 strike puts on our shares of Boeing. So those are in the money right now. So some of the questions and some of the thoughts are that now that it's in the money, and what we'd normally do coming closer to an earnings is book some profit on those puts and roll them down to maybe like a 305 or maybe 310, closer to the money there, 315, somewhere around there. But this time, it kind of seems more important to keep things where they're at. So here's the thought process. Again, normally coming up to an earnings on the 29th, we'd be in the money on these 330 puts, about $15. We could roll those down, book some profit. That way, if it continues to run up after an earnings, we've lowered our cost basis in our puts. And if it goes down, we're at the money anyways, and we had already booked a little profit, and we're good there. But this time, because of the news and just the situation that they're at, even though we have a nice looking technical bounce today, these 330 puts will do better keeping them on as they continue to go in the money if Boeing falls. So the decision is, do we want 315 puts that are not quite, well, they're a little in the money, but you'd pay more for them a little bit, or do we want to keep the 330 puts? And the reason, again, keeping the 330 puts will do better as Boeing continues to fall down a bit, especially if they miss an earnings coming up on the 29th. So that is kind of the reasoning why this time it just seems a little more prudent and a little smarter to be keeping things where they're at and making more money on the way down, because that's kind of where the trend is going. They've broken quite an important support level, at least a good support level over the last 6 months. And so it'll struggle as it's broken that to then pass it and break the resistance level on the way up. Past support becomes resistance when you fall below it. So why not roll 330 puts down? the news as well. You see it'll be difficult to get back above that 320. It may have a rough earnings. All right. So that's kind of a little peek into something we went over and decided. Are there any questions or thoughts? Or do you disagree with that? A question from Lance. It looks like, this is from Lance, saying it looks like it's bouncing on a pivot point and there isn't a pivot point at 320. Why are you looking at that as a support level? Because my answer to you, Lance, is this and this. 320. And you can make an argument for 330-ish. Kind of been right there most of this month. But it's around that range. And yeah, we have a shorter term bounce right here. But again, the question is, where is the trend and what is the situation right now? Again, the situation is we've got crappy news that we're dealing with for Boeing, and the trend is to the downside. They're not likely to have a great earnings report, and all we're trying to do is buy some time until Boeing comes out and says, all right, here we go. We've got the FAA is ready to look through this. We should have planes out, kicking out, by such and such. We're waiting for that news event where once they get that going, they'll pop pretty good. So we know we can't outguess the timing. We know we can't outguess the stock market. You can't consistently time these kinds of things. So you buy yourself some time. On stocks, you know how we like to do it. We like to protect for earnings with puts and manage it that way. We also have our leap long calls for some people in Boeing, and leaps giving us plenty of time for Boeing to come out with that news and take off. And in the meantime, if they continue to fall past 300 or 280-ish, somewhere around there, we have the opportunity to cash inputs, lower a cost basis, and dollar cost average leap long calls there. So it could be a good opportunity from a pullback to have even more of a return going forward when that happens. And that's kind of how you have to look at it. Yeah, you can't always. It would have been nice for Boeing to just continue to take off and head up from 330 from here. That would have been cool. So now you got to look at it as well. It pulled back again, bad news again, and you just take it as it comes. And you look at it as future gains. Ida's asking strike price. Are you talking about, let's see, what is your leap? So I think we have a few of them. As Kevin doesn't have any on his new little Kevin Hurley Trust account yet. I believe we had 350s, but just looking at, if it's something you'd be getting into today, I would actually just wait, Ida. But what you'd be looking at is maybe a January 2021 or you can go to June 2021. Gives you a little more time. But I would be looking at probably the 350s. Since it's gone down a bit, you could probably look at 340s. Let's look at 350s. Yeah, and the same goes for only a year out. You could go as low as 330 since that is the resistance level now. But again, I would be waiting. Ask that again, maybe next week or in a few weeks. But I assume Kevin will bring that up and start talking about it. But right now, you'd be waiting for the same reason that we're waiting on cashing in puts. Everything I just went over. So, yeah, it wasn't a great answer as to where we're at right now with everyone, because if you're just getting into something or looking to get into a Boeing leap, the circumstance is a little different now. It's fallen a bit, so you can get a lower strike and better cost basis type thing. So, all right, you're welcome. So that's a little education and look into what we're doing and look into what we're thinking and why. But as far as a trade, I wanted to look at dollar cost averaging forward. Kind of broke this 50-day. But it's kind of right at that $9 digit, even dollar figure, hitting this oversold on the Williams percent R. Not quite there on the RSI, but it is in a place where quite a few times it's bounced, um, just coming over that halfway point, coming below that halfway point on the RSI. So there's still kind of a justification there. It would be nicer if it was closer down here where it pretty much bounces pretty clearly every time it gets down to the oversold on the RSI. But the same is true here for the Williams percent on. It's working a little quicker. So another reason is I like to see how it kind of bounced pretty quick to hold the $9 price this morning. And just to show you what we've got, Kevin had put this one on last week, get this new account up and going and making money. And 10 contracts, January 22, $10 calls. Cost basis of 85 cents and trading around 67. So normally when we're dollar cost averaging these leap long calls, we're looking at, in order to, I guess, not over adjust or be, so we're not putting more money into something that could continue to fall and increase our cost basis. Usually we're looking at seeing the leap long call price trading at half of what we bought it for and doubling down so that we're cutting our cost basis by another third. But this is kind of a more technical reason, and look at Ford where we can lower the cost basis and put more money to work at this point, and kind of look at it as a second leg into this first leg of 10 contracts. And they're so cheap. To go all the way out to January 22 at a 10 strike for 67.70 cents is kind of a no-brainer. So whether you had put some leaps on like Kevin did or looking to get into it today, it kind of doesn't matter. You'd be looking at getting at a better price today, or legging in the trade for a little bit lower cost basis. So let's see. I'm just going to put 69 cents here. I don't know if it'll let me do that. It doesn't like odd numbers. Oops. So Ford, 10 more contracts. We're doubling there. We're putting more money to work as opposed to looking at it more as an adjustment type thing. We're legging in and going from there. Let me take a little screenshot of that. Send that in for Kevin. filled. So now we have 20. And there we go. January 22, $10 strike. Lonk. Long calls. While I'm typing away, are there any questions or thoughts there? So you can certainly go down to 68 or what have you cents, but I wouldn't worry too much as the spread really isn't huge. You're still getting a little better price than we did a week or so ago whenever Kevin had put this on, or at least the first 10 contracts. So you're still getting a little better price. They're so darn cheap. You get so much time. Kind of seems like a no-brainer. 20 contracts. It's so easy to dollar cost average if it keeps going down. To test like a 860, 850 is kind of the next. Maybe you can make a case for 870, but either way, they're all about 10 cents apart down to the next support level, or levels rather. But guys, are there any questions about Ford or Boeing, or any thoughts or questions about anything else? Lowered our cost basis a bit with 36,000 of the 50,000 he has here that we still need to kind of put to work. It kind of seems like a no-brainer to add a little more there to Ford. I would imagine that Kevin will be looking to put on a Boeing possibly for this. I'm not sure if he has enough cash. He would need to, maybe this is one he's looking at in his other little slush fund account that we had opened last year. So even one contract is going to be fairly expensive. $2,700, $2,300. So a few thousand bucks, but yeah. Look for Kevin to chat about that. If he doesn't next time, Monday, Tuesday, just ask him. or I'll bother him about it. But I imagine he'll be looking to do something there. Any questions, guys? If not, it's good to be with you this morning. Kind of crappy to see the futures down over the night and kind of a crappy open, but let's come back a bit. Not too bad. Still doing better than market for the year on the rest of our accounts. Things are looking okay. All right, guys. Thanks for joining me, and I will join you with Kevin Monday, Tuesday, and every day after that. And we'll see you next time. Take care.